Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. We had a tutorial. We had a workshop planned for today. The TPO, the time price offering and market profile trading, had to cancel it. Absolutely had to cancel it. We have to move on to some current events. It's just way too much going on right now. Even though the stocks are sort of bleeding a little bit, they're not getting hit as badly as they were earlier. But the big oil today is crude, or excuse me, the big oil, the big story is crude oil. We're seeing some really incredible things happen in the U.S. oil market. Let's go ahead and open that one up. As you can see, this is one of those things that you look at and you really can't believe it. We had an incredible bullish move of about 12% that has developed since Trump talked last night. Now, that's an absolutely huge deal. It's one of those things that you really can't believe until you see it. It's one of the biggest days in crude oil history, going back to the 9th of March. That was another huge one. You're going to remember the 2nd of April as well. I mean, these days are going to go down in the history books. There's such massive moves. I can't really articulate, at least, and do them justice. I really can't. And that's one of those things that I try to do. I try to pull off of my experiences in the market, and I've been around a long time. I've been around a long time in the markets. And for right this minute, there's not really much to say about the volatility other than it is extreme. It is extreme. So I want to welcome everybody to the trading room. Having some technical issues here. It seems to be just the way things are going today. Incredible volatility, incredible action. I'm definitely interested in doing some trades. We're going to do some live trading here. I believe we've got a pretty good idea about crude oil and what we need to do to accomplish maybe a few ticks in the bank. But as far as the actual state of oil and what is happening in the world right now, wish we had some good news to report. We really don't. We really don't. So I'm going to go ahead and see if I can fix this real quick. Hang on. Potentially we can get that going. All right. Good to see everybody back in the trading room. Out in the How to Trade community. Good to see you guys. Tuku, Bobby, Bob. Always a pleasure, gentlemen. Be sure to ask anything that you'd like today. It's a good day to answer as many questions as I can and try to draw from my experience in the market because there's a lot of it. I've been in this since about 2011. Started late 2010, but really started trading in 2011. I remember the biggest volatility events to ever hit crude oil was Arab Spring, right around 2010. 2010, 2011. And we saw craziness in the market, saw crazy volatility, but nothing, and I mean nothing like this. This is something that is historical. They're going to talk about this in a decade. Remember when the United States and Iran started butting heads or whatever? The volatility that we see is absolutely astounding. Let me see Matthew Biggs. Good to see you. I'm doing very well, Matthew. I'm confident things are going well on your end. Andrea Garwal, always a pleasure, Andrea. All right, so let's just dive right into the crux of this. We're going to go back over to the U.S. oil chart. You can see just key level at 97.50. We pointed that out. That would have been a real tough trade to take, though, in one that probably there's somebody got it. I mean, it went to 97.50. 38% retracement on the weekly chart of that U.S. oil. And, I mean, that is really amazing. That's amazing stuff. We talked about it yesterday. I put a tweet out on X late last night after the speech, and I said, 97.50 holding up is an extremely bullish technical. I'm over there at ShaneV_trader if you want to check out some of the analysis. I don't really post on there a whole lot. Just throw some trade ideas and things up. But the big thing that I wanted to point out yesterday wasn't necessarily that 97.47 or 97.50 was the buy of all buys. I'm not going to sit here and say, I called the bottom of it. I'm not going to say that. There's too many people out there saying that stuff. They're trying to convince a group of folks in the markets and otherwise that don't know what's going on and what to think. They're trying to convince them that they're right. You're never going to get that out of me here. But what we did say is I said, listen, 97.50 held. That is extremely bullish. Extremely bullish, especially off of the big news from the Trump speech last night. So a lot going on here. This feels to me like we've turned the page. There's an old saying, it's a cliche. It's called crossing the Rubicon. It feels like that this war just crossed the Rubicon. I'm going to go over the odds. We're watching them every day like a hawk. It feels like even though Good Friday is Friday, it feels like Easter Sunday. It still feels like there's going to be a ground invasion here. I don't know what else to say about it, but we didn't get any answers last night out of Trump. We got a lot of talk. We're going to go over the key points of the speech. Watched it live and then came in and just I had my screens going. I said, man, this is going to be an incredible market mover. So welcome, Joshua. Good to see you, Ralph H. All right, guys. So let's go ahead and just dive on in and get started here. Remember, if you want to trade anything that we're talking about today, check out Switch Markets. They've got everything you ever need to trade. And they've got CFDs on shares. That's something we're going to be talking a little bit more about as the year wears on. But that's going to be a market that a lot of folks are targeting. They've got commodities. They've got currencies. They've got everything. Some pretty tight spreads as well. You can see Euro USD is 0.1, fractional pips, British pound same, Japanese yen same. So definitely be ready. Be ready to trade with Switch Markets. They can give you up and running relatively shortly. So if we're looking at the U.S. oil market, the first thing I would do is probably switch to a futures. We're going to go with our time price offering chart. I was going to do the workshop on exactly how to trade these TPO charts. It's going to have to wait until next week. It really is. But this strategy and this way of trading, I've got a lot of questions about, and I'd love to cover those things. But the biggest thing we need to remember right this minute is that your point of control, you can see it's very thin. We don't have the huge amount of information traded at that price point, but we are starting to see the market consolidate right around 111.15-ish, 111-ish. So a lot of players are in there right now, a lot of players. For me, though, is this a TPO day? No, not really. This is one of those days where you're just looking at the action saying, okay, what happened right here? Well, right there was your speech. That was speech time. And basically what the markets did yesterday was they priced in ahead of time. And you saw it Monday and Tuesday. The markets priced in Trump announcing a ceasefire or a peace deal. We talked about it yesterday. Go back, take a look at the live stream. We looked at the odds of the words he was going to say. Didn't say ceasefire, didn't say peace deal. Markets are still in a bit of shock. The crude oil markets have exploded. There's been a lot of saber rattling out of Iran, a lot of things hitting the news wires. There was reports that a chief negotiator was killed last night in an Israeli airstrike in Iran. I don't know. I can't verify. I've been trying to verify it. These things are all over X. There's been reports of added attacks on tankers. Once again, can't verify. But take a good look at what's happened here. Compression, right around 100. Compression, break. And then once the brake's off and running, you are off and rolling. So let's take it down to a daily chart and see what we can do. And we could buy pullbacks, and that's about it. I do not advise selling in any way, shape, or form. I think that's a terrible idea just because you could really get hurt. You could really get hurt because all that has to happen, and I mean all that has to happen, is the right news story hits the news wires, and these markets are going to absolutely explode to the top side. So be ready for anything on the crude oil front. If you wanted to maybe make a retracement trade, I think it's a high probability trade. You just have to stick in there and get it. Spike low, that would be yesterday's low to today's high, right around 114, well, 113.97. So dial that in exactly, something like that. Let's go with 114, broad strokes here. Trying to move quickly. 107.38 to 107.50 is probably a hell of a bid if you can get it. I mean, it's good work if you can get it. But right this minute, we're compressed right around 111, 110.75. The volatility, though, is really huge. It is really huge. And what you've got here is you've got a situation that your 1 minute chart is, I mean, you're talking about even that one right there, your ADR is 23. That's absolutely staggering for a 1 minute chart. And look at the range on this one. Look at the ADR down here, average daily range, It was right around 30. So I really don't know what else to say other than WTI crude is in a really tough position right now. I know a lot of you trade U.S. oil. I trade U.S. oil, but given this volatility, if you don't have deep pockets or you don't want to take your leverage way down, you probably should pass. You're not gonna hear anybody else on YouTube telling you that. But the truth of the matter is, you've got to have money to trade this. So if you want to take your leverage way down, you can do that. If you want to trade maybe a micro futures contract in WTI, you can do that. But if you're trying to trade full size or trying to trade leverage in this environment, you're really asking you're asking to get your account blown out. And here's the problem: you're probably going to be right about your trade idea. You're probably going to be correct. You're going to get shaken out more than likely before it goes in your favor, unless you get lucky and you bought 97.50s and absolutely crushed it, and then you're probably on your way to Hawaii. Actually, it's flooded down there, but you're probably on your way to the beach and celebrating, buying trucks and things like that. So interesting stuff here, guys. To me, I just look at these technicals and I just go, man, what a mess. 107, I'd be looking at 107.50s to be a potential scalp. Theoretically, you could step up maybe and buy 110s, 110.09s, and try to grab that scalp to the top side. That could certainly happen. But just remember this. If the market goes against you, get out. Just get out. Because with a daily range that is upwards of $18, well, not quite 18, but 97.50 all the way to 114. So you're looking at about 250, something like that. Our Fibonacci's got messed up there. You're looking at 250. You're looking at $16.50 of a daily range. That's astounding. That's absolutely huge. It's one of the biggest days ever in crude oil. So be very, very careful with what you're doing. We need to talk one more thing about oil, and then I'm going to turn the page on it. UK oil is now trading at 107.68. That is an interesting dynamic because UK oil is the international benchmark. UK oil pretty much always trades at a premium to WTI crude. West Texas Intermediates here in the United States, North Sea Brent is the international benchmark. Typically, Brent always trades to a premium of U.S. oil, and right now that's flip-flopped. That's a new one on me. I mean, that's a new one on me. I sit here scratching my head going, well, that's new. We don't see that very often, so those are inverted. What does it mean? I think it means an energy war. I think you're going to start seeing infrastructure getting hit in the Middle East, and if that happens, I mean, all bets are off, and I mean all bets are off. So be very careful with what you're doing in crude oil. Sort of had to add a disclaimer here because it's just so volatile and so crazy in there. I don't want to see anybody lose, have a generational loss or a staggering loss because, yes, there is opportunity in there. And you're going to watch a lot of videos. And if you're researching the market at all right now, or you're watching live streams, or you're watching the news, everybody is pumped to trade. They're all excited. They're all pumped. They go, this volatility, we're going to make a fortune and do this and that and the other. And all that's great. I mean, really, all of it's great. Okay, great. Big picture, you've got to take your leverage way down, or you have to have a lot of money to do this. And I'm just telling you, trading full-size crude oil, looking at probably $500 swings every minute or so. I mean, you've got to have really deep pockets. You need probably $250,000 to do that right, and that's a lot of money for most people. So if you're a small retail account, take that leverage down. Be smart. Pick your spots. Believe me, things will return to normal, and it may take a few weeks. But the market's already pricing all this war talk in and everything that is happening globally right now. Take a look at the VIX. I mean, theoretically, the VIX should have exploded today. It's actually it's up a little bit. It opened much higher and sort of still hovering above yesterday's sort of doji. But what you have here is a VIX, a volatility index that's kind of flat. 25, the area's 25. We're not even above 30, and WTI crude's absolutely spiked and it's threatened to kill the global economy. So what's happening? The markets are getting used to it. They're starting to get used to the talk, the tone, everything that came out of Trump's speech last night. People are getting used to it, and traders are getting used to it. So I want to start off by that, have a little bit of a risk talk about why things are crazy and the way they are right this minute. It's U.S. oil and U.K. oil, and it's all about Trump at this point. Stocks fall, oil rises as Trump comments dent hopes for a U.S.-Iran war resolution. CNBC, we use it because it's free. We don't really use it because we support NBC. But you can see that this right here is a fascinating quote, and the whole reason why we're even looking at this article. This is something that we need to really start to consider, because a lot of folks that are in the know are considering it, but they're not really, talking about what could actually happen specifically to the U.S. 100. And we need to be very, 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 very clear that right now a good portion of your NASDAQ, of your tech stocks, revolves around AI. Here's the AI component out of the Middle East. Right here, it's pivotal for the United States that the Strait of Hormuz is reopened, not so much because of oil, but because of helium. Now, somebody commented in the live chat the other day about helium. Said Ton Schoenberger, CIO at Crosscheck Management, noting that helium is more valuable than foreign oil given its usage in semiconductor processing, and that there is no substitute for it. If you do not have semiconductors, if you do not have conductors, you do not have AI. You need electricity, you need computing power, you need electricity, you also need the conductors. And without the conductors, you got a problem. Without the chips, you've got a problem. So if you don't have helium and you can't make chips, the computer chips, and if it really, I would say, eliminates your semiconductor output, what do you think is going to happen to AI in the data centers and everything? It's all going to be placed on the back burner. What does that mean for something like the U.S. 100? It's horribly bearish. A horribly bearish scenario. Let's say this war goes another 2 months, and judging by Trump's speech last night, you won't really hear much about it. Holy cow! Breaking news: Trump fires Attorney General Pam Bondi. Fired Bondi. Things are really going crazy now. Wow! Donald Trump is moving toward fires Pam Bondi. Unbelievable. That's why these live streams are getting tougher and tougher to stay on point and on task, because things like that are happening. People have been talking about Bondi being fired for a while. Does that matter to the markets? No, it doesn't. But what it does speak to is a lack of stability at the top of the U.S. government. That's the bottom line. That's the bottom line. So right now you've got Trump giving a speech last night that we're going to cover here in a minute. You've got the Attorney General fired today. You've got crude oil up about $11. This is ugly stuff. This all speaks to unknown unknowns. What don't we know? We don't know. That's the bottom line. So you're seeing turnover at the top of the government. This comes on the heels of Joe Kent resigning 2 weeks ago. There's talk about Tulsi Gabbard potentially being in a bit of an issue. These are big deals. Doesn't say it's not going to, Bondi being fired is not going to hurt the U.S. 100. But what it does speak to is it speaks to more uncertainty, and there's trouble in paradise at the top of the Trump administration. No question about it. Funny Math, good to see you, Funny. Wow, it seemed like he was praising her not that long ago. There's going to be a whole bunch of these, Funny. Let me see. PC was not cheap to build as it is with the AI bubble. That's exactly right. The AI thing, I've been working with a lot of AI tools. I don't even know what to think. I looked at one this morning. We got to get back out to the price action, but I looked at a tool this morning that I couldn't believe what the thing could do. Pretty soon there's going to be AI scripts, and they're going to have my face in front of you here, and it's just going to run through a live stream. It's scary what's happening out there with the AI. As being I don't like to age myself, but I'm 47. I'll be 47 in June. I've seen a pretty good portion of the world. I've had some great experiences. I've had some bad experiences, but this AI thing, the young kids are growing up with AI, and they go, "Yeah, that's just AI," and I go, "No, you don't understand. You can actually do almost anything. Almost anything from a content production is one thing, but actually deep analytics and things, AI still has its limitations, but it's in its infancy. So if you shut down the superconductors, if you shut down the conductors, the semiconductors, and you do shut down chip creation because of a lack of helium, then you're going to be in big trouble. I mean, the US 100 is going to contract, and it's going to contract in a big way. So looking at the NASDAQ monthly, in the green a little bit, believe it or not. So what are you looking at? I'm looking at downside support down there at 22.5. I think it's going to be, eventually it'll be a bloodbath. The helium will catch up with production, and all of a sudden you're going to have to start revising down all sorts of different metrics all across the NASDAQ. This could be a real game changer for valuations. Clearly a bullish market. They've got folks that are so in the bag for the AI bubble. You've got a government that's going to commit pretty much anything that is necessary here in the United States. They believe it's an AI arms race. Same in China. A lot going on there. A lot happening in that environment. But if you don't have the products, if you don't have the energy, and you don't have the helium to make the semiconductors, then you don't have anything. And if you can't build the AI data centers, then AI grinds to a halt. So there's a lot going on here for me. Starting to get a bearish view of this market, but you're still in incredibly bullish territory on the monthly. You're up above that 38% Fibonacci retracement, which is huge for me. That means the bullish trend going back to the tariff craziness is still there. Looking at 22.5 as being an absolutely huge level. Also, you'll notice that we hit our moving average right there at 13-month EMA, which was right around 23.5, 23.488. So definitely take a look at that. As far as trading this intraday, what can we really do? Well, you got a lot of things going on here. You certainly do. You've got that big plunge that came across essentially when Trump started speaking last night. You got that, and then it came down and down. Kept creeping down during the overnight, and then we sort of based, and now we're on a big rally sort of during that U.S. session. You can see right there, opening bell, ding, ding, volume flies into the market. So are we bullish or bearish? One of the things that I was really interested in was the fact that we didn't have a massive equity sell-off. Crude oil is making history, and typically that inverse correlation between equities and crude oil has been the rule. We have seen that. That has been really the rule here, and we're not seeing it now. Crude oil's way up. The markets are not way down. I mean, you're off. You're a little bit in the red, but realistically, traders are buying it back, buying stocks back. So the idea would be that maybe the new energy dynamic in the world, maybe that favors the United States in some fashion. I don't see how, but maybe the traders are going, okay, we're not really betting that the war is going to be over soon anymore. And that's exactly what was happening. You can see right here, there was a lot of euphoria, people thinking they were buying it at a discount. Now we're settling down a little bit here during the late session. You could still probably bid 38% and get away with it. I wouldn't mind that play, but make no mistake, the market is not trending. This market is not trending. You got an incredible value area right there, back from the first, going into that late session, right before the big speech. Look what's happening now. You're trading that same area. So we're using a lot of principles here. We're using value area principles and things, but look at that. I mean, essentially, that is the deal. That is the zone, and we're trading it right now. I think you probably are just going to move sideways the rest of the day unless Trump says something else. That's for sure. Kirsty, good to see you. Eli, I wouldn't watch it without you, Shane. Well, thank you, Eli. I sure appreciate it. But like I said, these streams have become a bit of a challenge this week just because the news is breaking so fast. We can put out levels. We can do analytics. We can do all the things to cover the news and try to get you guys ready to go. But it's just happening so fast, you can't even hardly stay on top of any of it. I mean, for him to fire Bondi right there, that's something that's been looked at for a long time. She wasn't overly popular here among his base, among Trump's base. So maybe it's a political move, trying to win political favor. Some of the statements out of the White House, though, in the last 18 hours have been really crazy. They've been out there. They've been contradictory. We've heard things that are politically unpopular. And then we got the formal speech last night. So keep an eye on this US 100. As far as a trade right now, I'm not too excited about really doing anything on any market right now. But 23.865-ish, maybe somewhere in there, probably give you a pretty good look at maybe a late day scalp here. But I would not execute anything on a buy side or a sell side as we go into the close. Today's close, probably going to be ferocious. So I would be ready right ahead of that 4 p.m. bell, 4 p.m. Eastern closing bell. You're probably going to want to be on the sidelines or at least managing your risk aggressively. These markets are chaotic. They're absolutely chaotic. So you look at gold. I know I'm going to get the questions, so let's just go ahead and do it. Daily chart, interesting because these are probably weekly technicals, they look like to me. Let's go to a weekly. All right, there it is. So we actually have a decent range finally to work with gold. It's been tough because the volatility has returned in a big way the last several days. Right now, gold's off about 2%, and that's just becoming par for the course. We're seeing 2% moves, 5% moves, 6% moves every day in the metals market. So it's a challenge to stay on top of that. However, you've got really a weekly spike high, a weekly spike low. We've got a really nice wave to work with here using Fibonacci. So spike high, spike low. I would be looking for top side resistance right up around 49.15. That's a fantastic zone. We sort of made a play a little bit earlier this week up to about 4,800, and then we sold off big again today down to 46,661. It's a challenging environment, everybody. I'm not going to lie to you. Something like this. This is really tough. So you look at spike low there, spike high. You know, what's your pullback? Your pullback's to 50%. These markets are crazy right now. They really are. They're crazy. So be careful. If you're going to trade, if you want to trade tight time frames, you certainly can do that. As far as what I would love to do here with the gold market is be able to sell that 62% right up around 49.15, somewhere in that zone, maybe even scalp right in front of 5,000. That could be a fantastic way to do business as well. But maybe we take this back down to a 30-minute chart, something like that. So what's our intraday look like? Well, once again, there's your speech. You can see it, big red candle, compression, another big red candle. All right, that's making life tough. Then you're just sort of winding sideways. You're winding sideways, and then you get the little bit of a rally here during that U.S. session. U.S. Open, ding, ding. There's your rally, nice big 3 candles, and now we're rotating around. So I would say that even though you're down 2% here on gold, you're down 2%. It's no joke. You're still in rotation. You're still in rotation, meaning you've moved largely sideways. The only time you didn't move sideways was this move right up here, and that was Trump's speech. Why do you think Trump's speech crashed gold? If we're preaching war and we're saying that the markets are going to go, the conflict's going to go indefinitely, why on earth would gold go down? Because yields went up. 10-year T-bill yields at the time spiked. So all of a sudden that risk-free rate and those bond yields, the bond market started going crazy because that's all of a sudden becoming almost a desirable safe haven over gold just because a lot of people believe gold is overbought, right? Well, so if you're going to get 5% on some sort of U.S. Treasury, which is risk-free, there is no risk of it going down. The government will pay you or default. It's never defaulted. Maybe this is the year. I don't know. But you could definitely make the case that a better safe haven, a superior safe haven, is going to be gold. So we're watching this closely. I think this is it's an interesting market, but not really for the reasons most traders think so. I mean, we're looking at this 30-minute chart, and I'm saying, okay, what is this? Crash, base, crash. And now we're right back up in this zone somewhere. We tested that as resistance, and now we're coming down. So for me, I'm looking at that U.S. session, that New York session right there is going to be your open. You actually had a nice little spike low that developed there. I'll probably work right off of that swing low right down in that zone. And you can see exactly what's happened here. Sort of compression right around 38%. For me, this area is pretty good. I mean, this 46.50 zone, 46.55. Then we've got a Bollinger midpoint at 51 and then 49. So this 46.50 area is not a bad long. It's not a bad late day long here in gold. But once again, it's chaotic. It's not real great market structure at all. We could go right up and just do the U.S. session or the Wall Street session, cash session right now. Went right to 50%. That's a really good sign that we're not really trending. So if I was trading this, I'd probably be looking at 46 and a quarters late in the day. But if the market does develop into a big sweep, meaning if you see a ton of volatility come in and you're starting to get great big candles, you might want to stay out of it because it means another news event probably has just hit the wires or is about to. So 46 and a quarter, 46.30, probably a good late day bid. I would pass on 46.50 for right now, just because the market is it's extended right now. It's saturated. It's what I call saturated. We've traded this area repeatedly for about the last hour or so I don't have a lot of confidence that this area is going to be the line in the sand. I think we do probably go lower, and if we do, we're there with bells on here in about the next 2 hours. That could be a pretty good trade. Is it probable or improbable? It's improbable. It's improbable, but something to keep an eye on maybe later in the session. Let's go ahead and take a look at June gold futures. Now, this is interesting. There's a couple of contracts for gold futures that are important. One of them's June, one of them's December. I'm almost always looking at December. Because that end of the year gold futures contract, a lot of traders are hedging long-term and intermediate-term risk using it, and a lot of institutions are in there as well. So I'm always thinking about in terms of halves and wholes. So quarters, halves, and wholes. But this is a halfie. This is a June, right? June's the first 6 months of the trading year. The next big one, pretty much, well, I think it's going to be, what is the next big one? August. It goes June, August, then December, I believe, in gold. It's odd, but I'm always watching December. This is June. We're halfway there trading this. So when we're watching this type of market environment here, the chart looks the same as the spot market. You can see exactly what happened. Business picked up. The volumes kicked in, yada, 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 rotation. Okay, great. This is where your TPO charts can really help you, is when you get in a market like this. So we already know the majority of this right here, Trump's speech. That's what crashed the market. So you got a very, very thin chain. Looks familiar, doesn't it? Looks like that oil concept that we covered back on the 23rd of March. Well, this is interesting to me. Nice little weak chain. A lot of value here. Sort of your point of control during the overnight was right in there, and now it sits right here. So there's your POC. Your point of control is right around 46.93, and it's no accident that you're sort of bouncing off of it as topside resistance. So if you wanted to make a real tight scalp, and I recommend using 30-minute charts for your market profile. Once again, I had the whole webinar prepared. We're going to do it next week though, because it's a pretty good way to trade right in that zone. So there's your resistance right there, 46.94. You can see we went up just to 46.95.8, and now we're back down about 46.86. Interesting zone, interesting level. As far as what I think would happen from here, right off the top of my head, you can see this gap in the sort of in the queue, what I would call, that's our weak chain. That's our thin chain. More than likely, this area in here is going to get tested, and more than likely, we're going to rotate higher. Does it happen today? I don't know. Does it happen tomorrow with NFP? Maybe. So that's a good look at the gold futures contract right now. A lot of volume, though. I mean, realistically, it's been a pretty good day, pretty good trading day. Not as much action as we saw during Trump's speech, but fairly consistent. I mean, really throughout the overnight, not super low. And then business picks up during the U.S. session, and now it's starting to taper off a little bit again. So that's sort of what happens to gold. You probably want to be trading it if you're scalping it during that London-U.S. overlap. That's when there's the most action in there. But if you like a slow market, you could even be trading it right now. This is pretty good stuff, though. I do like what's happening here on this market profile. You can see that your value area high is right up here, right around 47.15. The value area low down around 46.20. And then right in this zone right here is 46.93, and we're just trading it religiously. Interesting stuff. Too bad we missed that trade. I was looking at something else, but that would have been a great one to execute live. We could have easily sold the point of control there and been in great shape. Interesting stuff. All right, everybody, let's see. I got way behind on the live chat. All right. Got some good questions in here from Funny Math. Let's see. Great Britain Pound AUD played out nicely. Yeah, we'll go ahead and look at that one. Big day down. Can't beat that. Interesting stuff. Yeah, I was looking for a little bit better sell on that, Eli, but we'll look at that one in just a second. Great Britain Pound Australian dollar. Well, let's just do it now. You can see what we were looking for here. Really just a nice uniform sell-off on the monthly. And I'm still in the game here, but nice rotation to the downside. You'd love a sell right up there, right around 195. For me, that would be great. 350 pips up there, though, so I don't really know if we're going to get it anytime soon, but that absolutely fantastic area potentially to sell. I would love that. We'll see if we do get that opportunity. Let's go to a weekly. Weekly's not bad either. I mean, we could definitely take a look at that Fibonacci sequence as well. That spike high right there, right to that spike low, 38% right off of that moving average. Sort of my compliments to the chef. That's a great trade. So if you got that short right up around 93, 193, somewhere in that zone, you'll notice our 13-week EMA is there at 193.52. Very good trade. What's the high? What's the high this week? 193.53. So we hit it perfect, and then we sold off. So it's absolutely unbelievable. Let's see. We got some questions here. Let's see. Funny Math. Do you think the war will end in 2 to 3 weeks like he said last night? So 2 to 3 weeks puts us... Well, I mean, it's just so hard to say. I think that Trump's tempering expectations. I think that, you know, the idea that what does really the war end mean? You know, there's a chance that the war just isn't the United States leaving. there's a chance that the region on itself stays at war. I mean, we don't really know the situation of Iran's munitions, even though Trump said they were pretty much depleted and gone. We don't know the situation there. And I think that if Iran decides that they want to hold the Strait of Hormuz as long as they can, or they want to dig in and they want to invite a ground invasion and fight a war of attrition that destroys the global economy, it's not going to end in 2 or 3 weeks. That being said, I could see the United States throwing up their hands and getting out of there. You sort of saw Trump basically saying that last night with the Strait, said, hey, we've softened up everything. We've got rid of all their artillery, all their hardware and everything. You guys need to go in and take it. I don't know. I don't think so. I think you're still going to be in there by the end of June, but that could change overnight. I mean, the United States really has a history of just pulling out on a whim, and that could happen. That could really happen. So, funny math, I have no idea. I genuinely don't. Let me see T. Marina. Good to see you, T. Welcome. Hey, Shane. Been sitting on the sidelines because of all the craziness. Yeah, me too. Very, very, very limited in what I've been doing. Very limited. I don't like these conditions at all. They're not. You can make a lot of money in there. Believe me, you really can. But I'm not going to be the guy that sits on this live stream and tells everybody that this is the greatest time ever to trade. What's going to be fun is when the war starts winding down or it's priced in, a lot like that Ukraine war. Once the war gets priced in, then we'll get back to volatility as usual, and these big news events won't sway prices as much as they do. They won't. I guarantee you we will get to the point where when Trump comes out and says something, the markets aren't even going to price it in because they're not going to believe it. They're not going to believe that it's accurate. And that's what we're rapidly moving towards. That's for sure. But, yeah, Team Marina, that's not a bad idea. Let's see. Had 2 consecutive days of losses, 2 losing days in a row. It's typically when I know something's wrong. If I lose twice in a row, 2 days in a row, that means something's going on that I'm not seeing, or maybe just the market's wild. That could be too. Let me see. Funny math. Do you think announcing ground troops in Iran will tank the market even harder in a big way? If they send Iran, and we're going to talk about that in a minute, but the ground troops, if they go in, you're not going to 2 to 3 weeks is a pipe dream. You're not going to send ground troops in and then be there for just 2 to 3 weeks. You're going to send them in. You're going to take something. You're going to take a strategic objective, and then you're going to have to hold it. And that was the biggest problem about Iraq. The United States rolled armor across Iraq and basically took over everything right away. But then the battle really started. Then the war really started, and that was sort of an occupation type of a situation, which historically you don't have really any positive things come out of an occupation. So if it turns into an occupation, you're going to be talking like a decade. But if it doesn't turn into that and they don't send ground troops in, it could end any time. But if the ground troops go into Iran, it's going to crash things, at least temporarily. You're going to see major selling, because the idea is going to be, okay, things are going to be really difficult here for a while economically. And because ground troops mean that the United States is going to take casualties. And once you start taking big casualties, one casualty is too big. I'm not going to say that. But if you start taking significant casualties from a political standpoint, they can't just walk away. Then they have to finish the mission and see it through. Right now, you could debate that the mission's over. That's debatable. It's basically what Trump said last night, that they've achieved pretty much all their military objectives. If you believe that, well, then you believe it. I don't see how, personally. But let's see. Gold looks bullish. Yeah, I'm not really too interested. If it stays above 38%, Eli, you could probably take that late-day scalp, but I don't know. Let me see. Eli, what about the visible range volume profile indicator? I have no idea what that is. I'll have to look into that one, Eli, and get back to you. Visible range volume profile indicator. I'll do that one. Absolutely funny math. Let's see. Bobby Bob over in the How to Trade community. You got a question. Let me see. Coach, tomorrow is Good Friday. Is it a good day to trade now that we will be having NFP? No, I don't believe it will be. If I was going to tell you to take a day off, it would be tomorrow. It would be tomorrow, because what you've got is closures across the U.S. markets. So you're not going to have that big cash open for equities that's basically sways forex futures. It sways all of it. You're not going to have that. And you're also going to have NFP coming out. So think about what you're going to have, Bobby. You're going to have thinner than usual markets. And then you're going to have a big news event like NFP dropped on the market. Plus, I know for a fact we're going to be pricing the opportunity or potential ground troops going in over this weekend. That's going to be priced aggressively. So, I mean, if you have something else to do, if you have something else to do tomorrow, anything, I probably would just lay off of the trading. But if you want to trade it, then you just sort of limit your exposure, limit your risk, and go ahead and business as usual. There's nothing wrong with that. But I don't know that tomorrow's the day to place a big bet. Let me see. Eli, the VRVP. I got to write that down. That's the great thing about trading, man. You never really can know all of it. You really can't. I've never heard of that. Maybe I've seen the indicator. I just don't know what the exact name is. That could be. All right, so we got a lot going on here as far as what's going on in the news. This is essentially it. I wanted to cover this. This is Trump's speech. This is exactly the Trump speech. Is exactly what he said. There was all sorts of things that he said that were interesting. You have an interesting point that he made right here about the nuclear weapon. Let's see. I want to thank our allies in the Middle East, Israel, Saudi Arabia, Qatar, the UAE, Kuwait, and Bahrain. They've been great, and we will not let them get hurt or fail in any way, shape, or form. So you're talking about potential stipends to the UAE and all these allies. If there's any damage, the United States is going to probably foot the bill to rebuild. I could see that happening. So they've been great. We will not let them get hurt or fail in any way. That means that the United States probably is not leaving the region as long as Iran's shooting missiles. Many Americans have been concerned to see the recent rise in gasoline prices here at home. This short-term increase has been entirely the result of an Iranian regime launching deranged terror attacks against commercial oil tankers in neighboring countries that we have nothing to do with the conflict. This is yet more proof that Iran can never be trusted. They will use them and use them quickly. It will lead to decades of extortion, economic pain, and instability worse than we can ever imagine. So basically, this paragraph right here jumped out at me because Trump's making the case for his actions. He's back and he's saying, listen, this is the deal. We're not going to let them get hurt or fail in any way. That means the United States isn't leaving for a while. So 6 of one, half a dozen of the other. I mean, in one side of the mouth is saying, okay, we're going to be done there very soon, mission accomplished here very soon. And then the other side, we're not going to let our allies get hurt ever, and we're going to stay there as long as we possibly, or as long as we have to. I think that that's absolutely astounding. There was another one about oil, basically saying that the allies need to go in and take the oil themselves. The United States has already sort of softened things up. It was really a wild speech, everybody, and it was something that's skewed our expectations. Definitely skewed our expectations. So going into Good Friday trade, let's go ahead and take a look at our odds. I've been referencing the poly market odds almost religiously this week because I'm interested to see what's happening. This is always a big one. U.S. forces enter Iran, and we're sitting at about 60-40 right now that we get that action this month. So let's go ahead and pull the graph, and you can see where we've been. And we were way up here. We were way up there, about 66% on the 23rd. Then we came down about 44. Then we went way up there, right around 66, 67%. And then we saw the big drop. The big drop was yesterday before the speech when we thought ceasefire, when we thought peace deal, and then you saw the immediate jump. So you start to build the correlation between the ground troops, U.S. forces entering. Anytime it looks like that may be a possibility, you're starting to see bullish action in crude oil and bearish action in risk assets. That makes life really, really difficult. So you need to be always monitoring the news, understand that ground troops really are the next big escalation in this war. Karg Island no longer under Iranian control. See, they believe that maybe Karg Island's off the table. We think that the Iranian regime will fall. That's not, according to the traders out there, they don't believe that's going to happen. Conflict ends by, this is exactly what the markets are attempting to figure out right now. And you can see it looks like maybe by the end of June. So we're pricing in probably another 8 to 12 weeks of this. I think that's a bit hasty. I would be looking maybe for somewhere up in here for a ceasefire. The problem with the ceasefire, though, is both sides are just going to restock their munitions. So a lot of folks really pull for ceasefires. They say you need a ceasefire, but there has to be a reason that both sides want the ceasefires. Which side wants a ceasefire right now? Does Iran want a ceasefire? Maybe, maybe not. Does the United States want a ceasefire? Maybe. They might want a ceasefire to get more interceptor missiles into the region. Iran might want a ceasefire to get more munitions into their caches. You just don't know. I mean, unless we were on the ground inside of these meetings and these operations, we just don't know. So for me, when does the conflict end? I would be betting probably right in here, middle of May. That would be my guess. As far as some of the rest of these markets, there's so, I mean, there's just so many of them. Will Israel or U.S. target nuclear technology center facility? It goes on and on and on and on. There's so many X factors to this conflict or this war that it's really difficult to figure out exactly which ones are coming next, which domino is going to fall. So we got a few trade ideas out and just a couple fundamentals, and then we'll sign off for today. The trade update, Trump's address roils markets, USD, Swissy on the move. Basically, we're looking at a test of this 13-month EMA, which is right around 80.69. So we're going to be looking at maybe getting a test there and then a retracement. That's going to be pretty robust resistance. I don't expect the monthly to trade back above that 13 EMA anytime soon. The Swiss franc is a safe haven, so that's something that we're going to have to watch closely as being a potential destination for venture capital. I think that could be a viable investment right now for sure. So I would be looking at the Swissy to stay, long term. This has been a bearish pair because the Swiss franc has been gaining on the U.S. dollar. I would be looking to see the Swissy maybe test that moving average. We haven't traded above it since when? Right back here, somewhere in March of 2025. So I think that we're going to hit that and keep going down. So that's going to be the trade idea that I put out. The rest of the trade idea is not really in play. We wanted to sell the S&P 500, but we didn't quite get high enough for us. That trade's still on the board. We'll update all these tomorrow. Today was initial jobless claims. We're not going to get too carried away with them. 202,000, a little bit beneath expectations in the previous release. So theoretically, that's an improvement in the U.S. jobs market. Continuing jobless claims continue to grow. That's the folks that are still on the unemployment rolls. And imports, exports, I wouldn't even worry about that at this point. That's a good look at the weekly initial jobless claims numbers. And you can see that when compared to the last 3 years of data, relatively low. So that's a good thing. Initial jobless claims mean not that many folks, or not as many folks as we've seen in the past, are headed to the unemployment rolls. So that potentially is a positive thing. Once again, we're going to have NFP tomorrow. So we're going to find out the real state of the jobs numbers. But these numbers right here aren't really going to move the markets very much at all, in my view. Okay, let's take a look at a few more markets, and we'll go ahead and call it a day. We'll look at Bitcoin here. Bitcoin, we go on and on and on about how flat the market really is. Well, there it is. This is a monthly chart. You can see last month's range may have been, just an extremely tight range. It may have been the tightest in quite some time. Your high last month was 76. Your low was 64. Not much going on here, and we are trading inside of last month's range. It's only the second day, so that's not really a big deal, but the bodies of these candles are lining up. It looks like rotation. So as far as Bitcoin goes, the long-term technicals, the yearly, which is what I've sort of been focused on with regards to my macro analysis, the yearly, still would love to buy 58s. We're still bullish, long-term bullish here, but this uptrend is definitely being challenged. We are filling this in. We can't seem to get established up above 70 or 75,000 for any length of time. To me, that's bearish. So I'm watching closely. I don't really have a dog in this fight, neither long nor short. This market's got to move before we do anything. To me, it's just sort of a dead fish. We'll wait and see what happens. Dollar CAD. We had a trade idea out for the dollar CAD the other day. I was on the weekly time frame, I believe. And essentially what we were looking at was this. We wanted the weekly. We wanted to sell right up there, right around 140, or maybe a potential buy down here right around 138, 138.15. Didn't get either. The market's really tightening up. It's an incredibly difficult position because crude oil rallying the way that it's rallying up 11%. We should be seeing a little bit more puff out of the dollar CAD, and you're just not getting any. So I go on and on and on about the U.S. dollar, Canadian dollar being a commodity dollar, and then when you get a big move in crude oil, and then the opposite play in the dollar CAD, meaning the U.S. dollar is up against the Canadian dollar, even though oil's up 10% today. That's a rarity, and that shows you exactly what's happening. We are at war. You're in a wartime economy. You're going into a war-type market dynamic, and that means that the unknown unknowns are what matters, and that's driving bidders to the USD over pretty much everything. So remember that We have correlations, and when everything works smoothly and you don't have a crazy market environment, it's pretty easy to trade. But when you see what we're seeing today, where we had a big speech, a crashing oil market. I mean, for instance, natural gas hasn't even hardly moved. It's down 0.5%, whereas the rest of the energy complex is getting smashed. Challenging market dynamics here to deal with. Not really sure what to do with it. You just got to ride it. You just got to ride the volatility. Do the best you can. Watch your risk. Watch your entries. Watch your exits. Good trade location is going to be the straw that stirs the drink. Trade location is everything. And if you don't have it, you're going to be in a position to lose. So you want to make sure that you're buying near the lows of the day and you're selling near the tops. And that's about all you can really do in markets that are this crazy. That's for sure. Let the market set up for you. Let it get established. Don't go rushing in. Wait for those technicals to be almost perfect before you're taking trades. That's very, very important. Very important, or else you could get hurt really, really bad. So be careful. Be careful with what you do. All right, everybody, I'm going to go ahead and sign off for right now. The AUD-USD looks interesting. Let's go ahead and see. All right, daily chart. Interesting. Bounced right off that 13-day EMA yesterday. That's good stuff there. I would be watching it again today. 69.49, trading right around 69.07. You could sell the top side 13-day EMA and get away with it more than likely. Weekly, pretty good stuff. You got a weekly EMA right there at 69.31. Spike high here. Spike low there. Potentially maybe a pullback sell right there from 69.67. A lot of technicals here. As far as your longer time frames, if you step back to a monthly, you can see that, I mean, the Australian dollar's correlation to gold is certainly present. You'll notice that this spike low right here, boom, spike low, spike high, pull back. Now we're rotating right around 69. So if you're rotating around 69, is it a buy or a sell from here? It's probably a buy. Technically, it would be a long-term buy. You just bid it and have to stop yourself out underneath 69 somewhere. But it's not the worst trade in the world. There's better ideas, I'm sure, but it's not that bad. So you definitely could be looking to sell in the short term, or you could buy and take a position maybe as a swing trade. The biggest thing that'll pay you off in this market environment, though, is just to cut your losses. If you're wrong, get out. If you're wrong, get out. You can't bet on the market to come back your way when the ranges are this big. When the volatility is this big, this is when people lose fortunes. They make fortunes, but they also lose them trying to ride out the action. There's an old saying, the market can stay irrational longer than you can stay solvent. Write it down. Live it, love it, embrace it. All right, everybody, that's enough for me today. I've gone on long enough. Interesting stream. You'd really love to get in there and nail down exactly what's going to happen and have some good prognostications. I feel like the last few years of doing this, we've had a pretty good finger on the pulse and what's coming our way. This war is an outlier for me. This is a chin scratcher. I mean, I just sit there and I go, well, I mean, this can go so many different ways. 2 to 3 weeks. Not if there's ground troops involved. If there's ground troops, it's going to be longer than that. That's for sure. All right, everybody, I'm going to sign off for right now. You have a fantastic trading session. Be sure to keep your eyes on the news feed, because the news out of Iran is what's driving everything. We'll be back with NFP live tomorrow, bright and early. Be sure to join. I'll go through the numbers, the jobs numbers, and what we look at it, what we're thinking, what we're looking at, and then I'll also take a good look at the latest news headlines out of the Iran war. If anything breaks overnight, and it typically does, then we'll get you all up to speed and maybe point some trade ideas out. We may be trading a short-term strategy tomorrow. I don't know if we'll go with the 9 EMA or maybe the 920 crossover, maybe the 5813. We never can tell. All right, everybody, have a fantastic session. Trade the action well, and we'll talk soon. See you.